Hi everyone, welcome to the channel. Today we'll break down one of the most common questions beginners have. What's the difference between stocks and crypto? By the end of this video, you'll understand how each one works, where they are similar, and where the risks are very different. Let's start with stocks. When you buy a stock, you buy a small piece of a company. You become a partial owner of that business. If the company grows and makes more profit over time, the stock price can go up. Some companies also pay dividends, which are small cash payments to shareholders. Stocks exist for real businesses that sell products or services, have employees, and report their financial results. They are traded on regulated stock exchanges, like the New York Stock Exchange or other official markets. Now, what about crypto? Cryptocurrencies are digital assets that live on a blockchain. They are not shares of a company. You don't own a business when you buy crypto. Instead, you own a token in a digital network. The value of a cryptocurrency usually depends on things like technology, adoption, demand, and market sentiment. Some crypto projects try to solve real problems. Others are purely speculative and can disappear. There is no guarantee of profit and sometimes no clear underlying value. Here is a key difference. Stocks are backed by a real company. Behind a stock, there are assets, products, employees, and cash flows. If the company grows, its earnings can support a higher stock price. With many cryptocurrencies, there is no company behind the token in the traditional sense. There may be a development team, a community, or a foundation, but you don't own a legal share of a business. This means the value of many coins depends heavily on belief, hype, and adoption. Stocks are part of a very old and regulated system. Companies must follow strict rules, publish reports, and share important information with investors. Regulators can punish fraud and market manipulation. It is not perfect, but there are protections. Crypto markets are much newer and often much less regulated. Some regions are starting to add rules, but many tokens still trade in a wild environment. Scams, rug pulls, and fake projects are common, especially for small coins. As an investor, you must be extra careful and do your own research. Another difference is when and where you can trade. Stocks usually trade only during market hours, for example, from morning to afternoon on weekdays. Markets close at night, on weekends and on holidays. Crypto trades 24 hours a day, 7 days a week, all year long. You can buy or sell at any time, from almost anywhere in the world, using an exchange or a wallet. This can feel very exciting, but it also means the market never sleeps. Prices can change quickly. Even while you are at work or sleeping, both stocks and crypto can move up and down, but the speed is very different. Stocks, especially large and stable companies, usually move in smaller steps. They can still crash, but big moves are less frequent. Crypto is known for extreme volatility. Prices can go up or down double digits in a single day. Some coins can lose most of their value in a very short time. High volatility can mean big gains, but also huge losses. If you hate seeing your balance move up and down quickly, heavy crypto exposure may be stressful. Stocks have a long history. For many decades, broad stock markets have generally gone up over the long term, despite crashes and crises. There is a lot of data and many books about how stocks behave over time. Crypto is very new. Bitcoin appeared in 2009. Most other coins are even younger. There is not much long-term history yet. Some coins have gone up thousands of %, others have gone to zero. It does not have to be stocks or crypto. Some investors choose to hold mostly stocks and add a small percentage of crypto. The important point is this: never invest money you cannot afford to lose, especially in very risky assets. Let's quickly recap in simple words. Stocks. You own part of a company, backed by real business and cash flows, traded on regulated exchanges with some protections, usually less volatile, especially for large companies. Crypto. You own a digital token on a blockchain. Often no company ownership behind it. Less regulation and more scams and risks. Much more volatile, with big moves up and down. So which is better, stocks or crypto? There is no single answer for everyone. Stocks are usually seen as more stable and easier to understand for beginners. Crypto offers more flexibility and potential for big moves, but also much more risk. The most important thing is to educate yourself, start small, and respect the risk. If you found this video helpful, give it a like, subscribe, and tell us in the comments, stocks or crypto.